So you may have heard in the news a little bit about Bitcoin in the last few months. We thought we would dedicate a video to Bitcoin and talking about what Bitcoin is. So Doug, do you want to start us off?
Well, so first of all, the big news this week, of course, is Morgan Stanley said that they're going to actually, for their larger clients, have it so clients can buy Bitcoin. Now, this has been a big issue for our industry because they don't know how to regulate it. So the regulators are way behind actually regulating the cybersecurity and Bitcoins.
It's like the Wild West.
It is, and I think that's why the delay. So one of the things I think we should probably talk about on Bitcoin is how it goes about being run, and that's through the blockchain, and people have heard the term blockchain. But what blockchain is basically a global network that is not regulated by any government or any certain company. Mm-hmm. There's a number of companies that are part of it, and that they have the security system to basically store the Bitcoin and keep it in safekeeping for the investors. And it's basically a security or a currency that you can use to buy NFTs, which we can talk about those. And even now you can buy, for example, a Tesla automobile using Bitcoin, and I think there'll be more of that.
And didn't you tell me that Tesla bought a lot of Bitcoin as well?
They did. They bought 150 million, and there's other companies like that, like Square, that bought 50 million. And that's one of the ways, even though it's not available to our clients yet, although I think Bitcoin will be available down the road, it's a way that clients can kind of backdoor their way into Bitcoin by buying Tesla, by buying Square, or ETFs that may, or mutual funds that own Bitcoin.
So you were telling me something about the gold miners, that it's important it was just as important in the gold mining rush to make, or just as profitable rather, to be in an industry that supported gold mining.
Exactly.
As it was to be a gold miner.
Right. So back in the 1850s in silver mining, gold mining, the gold miners and silver miners didn't make very much money. It was really the supporting companies, like, for example, Levi Strauss, who made the blue jeans that the miners wore to do the mining. Oddly enough, that's what's really valuable when they go through mines, is the old blue jean material. That's what they're looking for, not so much silver or gold anymore. It's really that's more valuable. But so another way to invest in Bitcoin and cybersecurity is through companies that are involved in blockchain or involved in the infrastructure of doing that. And we do that a lot through ETFs that we use, or mutual funds that are invested in that way, or you can buy individual companies.
And so what's, Bitcoin strikes me as a potentially volatile
Yeah, it is. It's extremely volatile.
If you want to call it that.
Yeah, if you look at it, it's extremely volatile. And it's not correlated to the stock or bond market. That's another reason why it's popular. In the past, people would use gold to have a non-correlated asset, but that's actually moving close to the stock market and bond market. Mm-hmm. So now Bitcoin's kind of replacing that non-correlated asset, but it's adding a lot of volatility to your portfolio. So one thing, if you were to invest in these ETFs and mutual funds that are more involved in either companies that own Bitcoin or are in the actual mechanism like blockchain, that you can participate but reduce your risk a lot. I really think every investor probably should have a small portion of their money in some sort of cybersecurity through either ETFs or mutual funds invested in the blockchain and or owns Bitcoin. But after that, that's all I would recommend, not a large amount.
Well, as always, if you have questions or would like more information on today's topic, please give us a call or drop us an email.